Hello, my name is Ian O'Donnelly, and this is my progress report on risk management strategies and day trading. The presentation overview, which you just saw is the title page, and next we'll get into the introduction, then background information, options being studied, schedule, what's done in remaining work, and then references. So for the introduction, the purpose of this project is to evaluate multiple day trading risk management strategies. From then, I will determine which is safest and most sustainable for a beginner. And in the final product, I should have a recommendation report for my father. And why this matters, day trading is widely accessible. Nowadays, you can day trade from your phone anywhere in the world, anytime. And from that, there's been a lot of misinformation about how day trading works and how to do it safely. And from that, there's been a lot of financial loss that is very preventable. So, some background information. Who is my auditor? My primary auditor is my father. He has experience in long-term investing, holding on to stocks, but he hasn't been around day trading, and he's concerned with the safety and sustainability of day trading. And my secondary auditor is my professor and my Word 204 classmates who are seeing this. Uh, some core risks are rapid price swings. It's a very fast-moving system, margin and leverage losses, and emotional and impulsive decision making. That happens. There's a lot of money involved. People get emotional and they make impulsive decisions that are not the right ones at that time. Um, why risk management is essential? It protects capital, prevents catastrophic losses, promotes consistent and disciplined behavior, and it is supported by behavioral financial research. So the risk management options that I am studying is the 1 to 2% fixed risk rule, stop loss systems, volatility based sizing, and margin and leverage considerations. What is the 1 to 2% fixed rule? So this rule limits how much money you can lose on a single trade to only 1 to 2% of your total account. So say you have $500 in your account, you're only going to risk $5. Why it matters, this strategy prevents catastrophic losses, controls emotional panic, and is a very beginner-friendly option to start with. Going into stop loss systems, what this is, stop loss, you set it and um, it automatically sells your stock when the price drops too far. Why this matters, it enforces discipline automatically, it prevents holding on to bad trades emotionally, and protects gains during momentum, and reduces panic-driven decisions. Volatility-based sizing, what this is a strategy. Just how many shares you buy based on how volatile the stock is. So the more volatile the stock, the smaller positions you'll have. So why does this matter? It balances risk across different stocks. It uses real market data. It is more mathematically complex, which means it is less beginner friendly. But if you already have a foot in that door, it is a good place to start. And then margin and leverage considerations. So what this is using borrowed money from a broker to increase trade size. This can increase profits significantly. At the same time, it also increases risk as significantly. It is extremely dangerous for beginners and not very recommended. So here, this is my Gantt chart. I'm planning on having the project done around December 15th, the Monday before it is due. And the project is moving right now through research analysis and final production phases. Academic sources are being collected and reviewed. I have six, and I need to get four more, followed by comparative strategy analysis and figure development. The final stages will focus on drafting, revising, and formatting, and then preparing the report for final submission. Um, Currently, I'm transitioning from the research basis into the analyzation of that research. Um, so going on to what's done, what's in progress, and what's remaining. What's done is I have my topic, my audience, ethical framework, strategy options, and my evaluation criteria, which is safety, ease of use, emotional discipline, long-term sustainability, and beginner complexity. And I'll use a decision matrix for that. What's in progress, academic research, quantitative comparison figures, so charts, risk reward diagrams, strategy performance analysis, visual layout refinement, and drafting final recommendation section. And then what's remaining? The final revisions for the tone and clarity of the report, final formatting, proofreading, and then submission. And then here are my references and questions. So, does the project focus feel appropriate for a recommendation report rather than an instructional guide? What area would you want explained more if you were the primary intended audience? And are the evaluation criteria clear and fair for a beginner trader? That is my progress report. Thank you.